Hello, everyone. Welcome to another webinar by Smartkarma. I'm Michael Tegos. Our webinar today is organized in collaboration with the Singapore Exchange, and I have the pleasure of welcoming back Insight Provider Kyle Rudden, who will talk to us about the foundations of environmental, social, and governance investing, or ESG investing. ESG has been a major theme on the Smartkarma platform. Kyle has been at the forefront, publishing reports on several key aspects of the topic. A few words about Kyle. He is an ESG analyst with an alpha-centric approach to ESG research. ESG is investing, in his words, is first and foremost investing. Alpha-centric does not mean apathetic, though. Kyle believes that global sustainability, that is environmental stewardship, social equality, and economic prosperity, is imperative, and private sector capital is its cornerstone. Private sector capital still has fiduciary responsibilities. Profitability is necessary for sustained impact. The triple bottom line is people, planet, and profit. Kyle, welcome back to the webinar. I'm sure everyone is looking forward to hearing from you today, so I won't delay us any further. The floor is yours.
Great, thank you. Good evening, everyone, and thank you for your interest in this webinar specifically, but also more generally in ESG and ESG investing. Today's webinar, titled Foundations of Sustainable and ESG Investing in Finance, is the first in a series of, it'll be an 8-webinar series, so 7 more. I'll get to that in a little bit more detail in one of the slides later. But first, just a very, very quick introduction. I won't belabor this point. My name is Kyle Rudden. As Michael said, I cover sustainability and ESG investing topics on Smartkarma, primarily Asia-focused, but not exclusively. I kind of go wherever the events are. Prior to joining Smartkarma in 2019, I was involved in various aspects of ESG investing and investment research. From the kind of stuff I'm doing now, issuer-specific and thematic ESG investment research, but I also earlier had developed some sustainability and ESG themed equity indices with S&P and Bloomberg, and consulted GRI and SASB on ESG metrics and materiality, and even helped develop some academic curricula in the area of impact investing. All told, just over 20 years dedicated to ESG investment research per se. The prior half of my career, the pre-ESG epic, as I like to call it, was in more traditional investment research, mainly as a sell-side equity analyst and head of JP Morgan's global energy equity research group. So I covered a lot of what I'm doing now. We didn't have the ESG vernacular for it back then, but it's all very relevant. In fact, my most poignant lesson in corporate governance came from Enron, which is one of the companies I covered a long time ago. Moving on, we already covered the introduction, so there isn't much left to the agenda. Basically, 3 content sections in this presentation. As I mentioned, this is the first in a series of 8 webinars. Upcoming webinars will cover specific aspects of sustainable and ESG investing, including deeper dives into some of the stuff I'll go through today. This introductory webinar really provides a foundation for the series and upcoming webinars. It addresses really 3 things. What exactly it is we're talking about when we throw around the vernacular: sustainable, ESG investing, finance, et cetera, and so forth. Why we're talking about it, why you and I are talking about it, why we're talking about it today, why we're talking about it vis-a-vis Asia. And then thirdly, kind of how, really just how one goes about investing. And really the focus there is kind of on the ever expanding menu of ESG related, sustainable and ESG related investment products globally, but particularly in Asia. The first section could be a little necessary housekeeping, a few definitions. It might be repetitive for some. I'll try to keep it interesting, but I just really need to kind of lay out a few operational working definitions on a couple of things. This is the what we mean by sustainable ESG investing. Just a few quick slides on this. One on general terms. Really, the main takeaway here on this slide is just to get a sense for where ESG, the third item, kind of fits within the grand scheme of things. Think of sustainability as sort of the overarching concept, an umbrella term under which most else falls. And for some in investing, it's not only an overarching concept, but it's an ideological goal. But sustainability is really the overarching umbrella. The common Brundtland Commission definition is something about meeting current needs without mortgaging the planet for future generations, or compromising the ability of future generations to meet their own needs. A simpler definition, quite honestly, is something like living in ways that are environmentally, socially, and economically sustainable. And what that basically is the triple bottom line. Usually, people, planet, profit. It's become recently people, planet, prosperity. For whatever reason, I think prosperity is a broader concept, and maybe profit offended some people. I don't know. But it's basically environmental, social, and economic pillars. It's a little different than ESG. So environmental, social, which includes governance, and economic pillars, the people, planet, profit. Economic really applies to when we think of sustainability at a societal level. The triple bottom line really is effectively ESG, environmental, social, and governance, plus an additional E for economic. At the societal level of global sustainability, sustainable development, that each is truly economic, but we can apply the triple bottom line concept at the issuer level, company level. Really just think of E more as an F for financial. Thus an issuer's triple bottom line is really the net of the non-financial factors, E, S, and G, environmental, social, governance, plus more traditional financial factors. I'll get to this in a little bit more in a couple slides. The only reason I put corporate social responsibility in there really doesn't fit into all this that well, but I put it in there because it is a term, phrase that I've seen create a lot of confusion. Not always, but it can create a lot of confusion, especially in Asia. Asian companies have had a long-standing and very impressive corporate social responsibility history, track record. CSR in the traditional sense, doing various sorts of social good, charity, philanthropy, community development. The issue arises occasionally when companies approach sustainability and ESG reporting as if it were the same as CSR. Corporate social responsibility activities certainly fit within the social pillar sections of a sustainability or ESG report, but the corporate social responsibility template, heavy on narrative and pictures, light on data, just generally doesn't work. I just want to bring that up. We're not going to really address corporate social responsibility much. Going to the next slide. Not going to read this to you. It's just, this is about ESG, and I had ESG on the prior slide. I figured I should probably list a few metrics. You've seen things like this before, I'm sure. Just list a few representative ESG categories for each pillar. And by representative, I mean common, more or less universally relevant material. One of the upcoming webinars is going to be a deeper dive into ESG metrics and materiality. For now, really on this slide, just be aware of a few things. That, there are a core set of metrics that tend to be relevant material to most companies in most industries and sectors. Kind of at a level below that, relevance and materiality of metrics can vary a lot by sector, by industry, by geography, even by company within a sector, industry, and geography. The other thing to keep in mind, not so much for this webinar, but when you hear about materiality, you have to ask what the definition of material, how material is being defined. When I refer to materiality, unless I say otherwise, I'm talking about financial materiality. The impacts that ESG factors could have on a company's financials and thus its securities investments. But others define materiality from a sustainability perspective. They think of materiality as the impact that ESG factors could have on the environment, society, et cetera. Both are important, but it's an important differentiator to make when you're talking about materiality. But that is another slide. Lastly, a few key terms in terms of investing. I went over some general terms before. This one's a little bit more investing specific. There's a continuum of, and this is changing a lot, but continuum of sort of investing styles, if you will. I mean, historically, when this, and when I say this, I'm talking about sustainable investing, ESG investing, whatever term we want to use. This was an obscure niche, right? This is pre-mainstreaming of ESG. And yet impact investing, which kind of is closer to the philanthropy end of things. It's not. I mean, it's a for-profit initiative, but it's more concerned about having a positive outcome in whatever area it's targeting. Generally speaking, accepts slightly lower hurdle rates of return, generally not below market, kind of more the purview of like development banks, foundations. SRI, socially responsible investing, which has more recently become sustainable and responsible investing. So SRI, just slightly different underlying words, historically has really been about value-based investing. Either ethics, like avoiding sin stocks, like alcohol, gaming, porn, heavy weapons, that kind of thing, or faith-based investing. Often there's an overlap with those, and often implying negative or exclusionary schemes. And on the sort of impact alpha spectrum, definitely more focused on alpha than the philanthropy and impact investing in, but not quite as alpha-centric, alpha-focused as ESG. Now, there are two ESG bullets here. Here's the reason, because things are changing. Historically, there are kind of three integration approaches. And when I put integration in quotes, because they're really incorporation approaches. One is officially called ESG integration. That actually means something specific. That's just general integration of ESG factors. And there's best in class, which is best way to think about it is positive screening, like ESG leaders, and thematic ESG. And all for years and years and years have really been about investing and above market returns. It's not been about charity for many, many, many decades. The reason there's a fourth bullet or a fourth section with ESG investing in quotes is because ESG investing as a phrase tends to mean those three integration approaches. It has historically and it still does. But ESG investing with the mainstream of ESG is kind of a more general term. And I included this as just kind of general ESG incorporation. It's not beholden to those formal integration approach. It's really just any investor that cares about non-financial factors, looking at ESG factors. And kind of by definition, because they're not in this sort of sustainable investing do-good world, they're just your typical mainstream average investor looking at non-financial factors. This is the most alpha-focused of all these categories. So the most interesting part or section of these three, I think, is the why. Why we talk about this? Why this topic at this point in time with this group of people? There are likely many answers to that question, but one thing really stands out for me, and that is the summary thing I have open there. Asia as today's global epicenter of sustainable ESG investing activity. I say that kind of thing often, slightly differently worded. And I either get strange looks, or if I'm on the phone, I get long periods of silence. Less so these days, but let me explain that a little bit. The key to the statement's credibility or lack thereof is the relative versus absolute distinction. On absolute measures, there's no question. I mean, when I say absolute measures, I'm talking like ESG assets under management in dollar terms. Asia still lags Europe and to a lesser extent the US. There's no question about that. But in relative terms, Asia really is, in my view, the epicenter of growth and progress. It's the new frontier of ESG investing. Even relative to Europe. I mean, there's a lot going on in Europe right now, but the starting basis is nothing like in Asia. Asia truly is a tabula rasa, the blank slate. A little less so today, but a year ago it was. Kind of starting from ground zero. And there are countless indicators of ESG activity in Asia. I published a report recently on the rise of the chief sustainability officer in Asia. I think that's an important indicator. And you just look at the number of conferences and publications covering ESG in Asia. The three I have listed here, though, just kind of broad categories. One is on the left, that ever expanding menu of sustainable ESG green related investing products. That's a separate section and a separate group of slides coming up. Relative growth in ESG assets. Again, absolute dollars, it's not a lot. This is based on a Morningstar study. So this 3,000% growth 2019 to 20 to 25.4 billion is based on a Morningstar report, and that covers mutual funds and ETFs only. So the number is going to be even bigger, and it doesn't, and that's dedicated ESG. There's so many investors kind of incorporating ESG that aren't labeled as ESG funds. That's a big number, even though it's still only 2.5% of global ESG AUM for mutual funds and ETFs. It's still at 3,000% a huge number. And that's kind of the key for me. But moving beyond that to the third point, this is something that a metric, if you will, a KPI that I look at a lot. I think it's more important. Asia has, in many ways, not just with reporting, leapfrogged the rest of the world in terms of sustainability and ESG. Got to the party late, but making up for lost time, doing a lot very quickly. So it's natural that if you look at assets under management numbers, it takes a while for those to, in absolute terms, start looking like Europe and the US. But one really interesting metric is the percentage of equity market capitalization. I didn't bother to look at bonds. That is subject to formal ESG disclosure listing rules. Asia's ahead. I mean, I don't even want to talk about the US, but I mean, even ahead of Europe. And it's not like, I really dug into the numbers. It's not like a Hong Kong exchange skewed thing. I mean, that is a big exchange with a lot of market cap with listing requirements, but 12 out of 19 exchanges that I looked at, Asian exchanges. I'm talking Asia, not Asia Pacific. So I'm excluding Australia and New Zealand. 12 out of 19, or 63% of exchanges have a formal listing rule. In Europe, it's 4 out of 22, or 18%, and in the US, it's 0. And I even went out of the way to back out double counting for BSE and National Stock Exchange. So there's nothing in here that's really skewing it. I mean, that's it's a genuine indication of not assets under management, but issue or market capitalization that is subject to ESG disclosure rules. And it's not a perfect metric. It's not the only metric, but given that AUM numbers, assets under management numbers, are so low from this starting point, it's another way of gauging this epicenterness, if you will. Moving on, just to cover some of the investment platforms and products that are emerging. Two great facilitators, by the way, of sustainable and ESG investing. First, platforms. I'm not going to go through all of them, just the two big ones. Many Asian exchanges have initiatives underway promoting some aspect of sustainable investing and/or finance, but only two that you see here, SGX First and Hong Kong's Stage, have developed really well-conceived, strategically integrated platforms and are executing on those strategies. That versus any one of the many lesser conceived Me Too platforms. There are a lot out there, not just in Asia, but elsewhere. Or even a well-conceived but narrowly focused initiative. These are truly global initiatives that are doing it right. Slightly different in terms of emphases and progress, but this is the same. They're examples of how leading financial exchanges are leveraging their unique position, which is the critical intersection of investors, issuers, and government, how they're leveraging that position to move the sustainable and green investing agenda forward. And they're able to do it, unlike the US and Europe, which did it a lot more slowly and had to deal with years and years of legacy issues and baggage. Again, very, very clean slate. And there are challenges to that, but different regions in Asia are working from a clean slate and seemingly doing things right. The flip side to that is it's a patchwork of a lot of different approaches, but we can talk about that later. The platforms are important. I put them up front because important for a lot of ways, but for this webinar, they're important because one of the really critical ways that they, particularly SGX First and Hong Kong Stage, are advancing sustainable and ESG investing. And I'm using those terms kind of interchangeably, by the way. One of the critical ways that they're advancing sustainable and ESG investing is by creating or enabling others to create or facilitating the creation of new, whatever you want to call it, sustainable, green, ESG-related investment products. And importantly, it's not just more of the same. It's not more ETFs or more mutual funds, although those are great and have a place. We're seeing, products that are growing in sophistication and potential application, particularly for institutional investors who not too long ago were kind of left in the dark with just, ETFs and mutual funds out there. Really just, this is a huge ecosystem, and it is one of the upcoming webinars. Here's just kind of a few examples. The main thing here is what you're seeing left to right is kind of a far left, more traditional and/or retail-oriented, kind of up through the ETFs and especially the ETFs. Right in the middle, you have the diverse bond landscape, and depending on what kind of bonds you're talking about, and that ranges from retail-friendly to institutional accredited only. But then on the right is sort of the emerging world of sustainability, ESG, whatever you want to call it, derivatives, futures, other emerging markets and products and it really runs the gamut. I mean, talking about carbon markets like Singapore's Climate Impact X, private equity investments, venture capital. I mean, there's a whole bunch of things, but it's not so much any one of those issues for this webinar. It's not so much the details of any one of those items, as much as the group is an indication of growth and diversity in sustainable and ESG related investment products. Because not long ago, ETFs and mutual funds were the only ticket in town. Again, important, but now, with the growing menu, and again, not just Asia, but around the world. I shouldn't say around the world, Asia and Europe. Growing menu of like ESG index futures and sustainability related derivatives. Institutional investors have more and more options to manage risk or speculate if that's their thing. Project financiers can lock in renewable fuels prices. I mean, just an entirely new world of sustainable investing finance. It's all still very much in formative stages. There's a lot that still needs to be kind of worked out, but it's certainly encouraging. And again, Asia, it really is, in my view, the new frontier, sustainable investing in finance. There are challenges, there are risks. I mean, the same data problems and ESG information problems that plagued the US and Europe years ago are now Asia's problem, and even more so just given how, one of the wonderful things about the region is it's so diverse, but that's also a problematic issue from an ESG and policy and development standpoint. You've got, lots of different countries and agendas, some more focused on sea level change and climate change and sea level rises, others focused on governance, others focused on social issues. It's kind of, in many respects, creating a complicated patchwork within the global patchwork, which is already complicated, something that the world is trying to streamline and standardize, but still, it's encouraging having watched Asia go from zero to kind of leading the world in ESG progress in just a few years has been amazing. Again, many of these topics are the subject of future webinars and deeper dives, but I'm certainly happy to answer some of them in question and answer form now, without getting into too much detail, or any other questions that I have about this webinar or anything loosely related to it but not covered in it.
Great. Thank you very much for this, Kyle. This was a very enlightening introduction. We will spend maybe the next 10 minutes or so to tackle your questions. So first question from the audience is, why did Asia sort of lag in coming onto ESG, basically? Was it a question of non-awareness, cultural differences, or just generally the industries in this region were not keen on or prepared to embark on ESG investing?
I think almost all of the above. A few things. One, I mean, there are industry and sector characteristics about Asia that make ESG difficult. And you have a lot of either wholly or partially state-owned enterprises, particularly in messy ESG industries, like energy and mining and that kind of thing. Many of the conglomerates spread over multiple jurisdictions, countries, but culturally, I think that's been a big issue. One major issue, and also the subject of one of the upcoming webinars is the ESG's ability to generate alpha. And Asia's, for the most part, with some exceptions, been very focused on kind of what can ESG do for me and my portfolio, which is makes perfect sense. So I think it's just kind of taken a little while for the world to sort of embrace ESG a little bit more as something that's potentially alpha generating. That's been an uphill climb. It's taken a number of years. And then just, lastly, as I mentioned a little bit more, alluded to before, very different priorities. Corporate governance, huge in Japan. I know Singapore cares a lot about rising sea levels. They're just different foci, different agenda. It's hard, although major markets can exist in little bubbles and microcosms. You kind of need to make it worthwhile for most institutional investors. Everybody's got to be on the same page, not just regionally, sub-regionally, but globally. And I just think it took a while for Asia as a whole to kind of come on board. I mean, still very different approaches, but yeah, it took a little proof of concept, if you will, that can generate returns and gradual changes in attitudes, I would say. Has done in 2 years what took Europe and the US 20 to 30 years. It's absolutely amazing.
Definitely. I think from your presentation, it's obvious that while it did take a bit longer to get there, it's moving much faster than Europe and the US in this regard. So that
Yeah, and I
is
think for two reasons.
certainly an interesting thing to watch.
One, it's the just the Asian drive to get things done.
Hmm.
But two, it's that blank slate. It's not, because Europe and the U.S. got to where we are over decades. It's just been a lot of legacy decisions and policies. A lot of it's baggage. Asia for the most part is starting from a blank slate, and that really speeds things up. It's not encumbered
Definitely.
by legacy baggage.
Hmm. So another question goes into the concern of greenwashing, basically. So the question is, which ESG ratings would you say truly reflect good practices? And do you have any tips on how to identify greenwashing?
Let's see. A couple things. It's probably not as rampant as a lot of the media would like to think, but when it happens in a pretty big way,
Hmm.
and it's a concern. And when I'm using the term regulators loosely. People that decision makers, some regulators, stock exchanges, NGOs, are aware of this and are actually in Asia, both Hong Kong and Singapore, particularly with funds, really putting the screws to funds in terms of how they market themselves and what qualifies as ESG or sustainable, et cetera, and so forth. That stuff's kind of important. In terms of identifying greenwashing, it's like forensic accounting, it's forensic ESG. I mean, just digging into on a case by case basis, digging into it, doing due diligence on the data, the numbers, making sure things match, finding alternative data sources, and corroborating. I recently did something. It was at Exxon related during or around the time of the proxy fight. And I just, I wanted to double check some of the major integrated numbers so that the US has a big database of facility specific emissions. So I was able to go and take, every Exxon refinery, and not just the refineries, but the outhouse behind the refinery, and figure out the emissions. And just, it was only US, but I was able to do a sanity check. It's that sort of thing. I mean, really, kind of doing your homework, if you will. In terms of ratings and relying on others to do that homework, sometimes that's necessary. Investors have big portfolios to worry after. They can't be doing that kind of due diligence on everything. Most of the ESG rating, that top tier ratings providers, do a pretty good job at ferreting that kind of stuff out. I wouldn't rely on the ratings themselves to do that, but the analysis, the underlying data, that kind of thing. I have to say that the third-party rating provider, although ratings and scores get a bad rap, and in many ways they should, the underlying work is really impressive for most of them, and they now, have made the underlying data as part of their product. So, really digging, don't just look at the score or a rating, but digging deeper into what goes into that.
Hmm. Thank you for that. I guess it's slightly related, but another question basically asks about certification in Asia. So the question is, are ESG products in Asia more commonly self-certified or independently certified? And what's your view on the reliability of those certifications?
I guess it depends who's certifying. I mean,
Hmm.
Arthur Anderson a couple of days ago, big names. Yeah, there are also, by the way, there are also another thing I look at in that same context. I'll get back to that. When I'm looking at sustainability reports and third party sustainability SRA sustainability report authentication, I look at two things. I look at a few things. One, who it is. If it's a major auditing firm or somebody I've never heard of. Two, whether it's full or partial. Like a lot of times, a company will boast high up in the sustainability or ESG report that they have assurance, have been audited, but then when you get down to the bottom, it says like just greenhouse gas emissions from plant number one, or something really limited. So make sure that the audit and the authentication is widely applicable to the company. But the other thing that I do in sort of that same exercise is sort of credibility of reporting exercises. Look at sustainability related certifications, and they're not all created equal, but a lot of the ISOs and like some for real estate, some of the Asian real estate like green building awards are not easy to get. Obviously do your research into those, but a number of hard to achieve. I mean, those are also third party verifications of the company, not of the specific report. but of the company's sustainability, intelligence, and practices, and reporting, transparency, et cetera, and so forth. So, certification, like top-notch certifications like ISOs, and the authentication by top auditing firms are pretty solid indications that everything's right and it's not greenwashing. But again, you never know. Caveat emptor. It's doing homework and triangulating and cross-referencing as many data points as you can.
Mm-hmm. Another question ties into, I guess, a broader question about ESG investing in general, which is, I would guess, the very thing that also drives your analysis, Kyle, on kind of proving that ESG investing is viable and can be profitable. And the question is, we see speculators heavily invested into cryptocurrency, even though we see that mining cryptocurrency is detrimental to the environment. So why would institutional or retail investors be drawn to ESG investing now, unless the potential for growth is apparent?
I agree.
Yep.
There was a critical word you used. It was either proving or proven. Proving is hard. I've been doing, again, dedicated, ESG proper research for about 12 years, and the first, 8 was almost not exclusively, but almost exclusively trying to prove ESG out. Trying to prove relationships. I up to my eyeballs in correlations, but causality has always been elusive. They're non-financial metrics that's so hard to directly tie to some of the financial metrics. But at some point, a lot of really strong correlation over and over and over, year after year, says something. I still would love to have a more direct tie, but I've done a lot of research into it over the years, and there's no question in my mind that it does contribute. And in fact, in a lot of ways, try to explain to some people years ago, before the ESG vernacular, many of us that are that old were doing this kind of research, right? I mean, we would go and kick the tires of a potential investee company, and we'd talk to them about culture and employee incentives and motivating them. I mean, we talk about a lot of non-financial, social, and governance issues as part of our overall fundamental research. It just now has a label, ESG. To me, I don't know that we'll ever be able to directly tie ESG as a whole to alpha. Obviously there are big, ESG events. I mean, I've done event studies on, data breaches and corporate corruption and that kind of thing. I mean, those are the exceptions to the rule, but generally speaking, it's kind of like part of the whole package. Just like that fundamental research. And I'm convinced. I'd love to see proof. I'm still waiting for that, but I'm convinced that I'm going to use the term carefully. Corporate social responsibility, social corporate behavior, ESG mindedness, it does ultimately trickle down to the bottom line. It's hard to follow the direct path, but it gets there, and it's pretty evident. But again, it's that kind of stuff really is requires real research. It's not. You got to be careful with throwing an ESG index up on a screen against a non-ESG index and looking at the delta and saying, ESG generates alpha. There's a lot more to it than that, but I'm convinced it does.
Got it. Thank you for that. Maybe as we sort of wind down, I will combine a couple of 30,000 feet type of questions, which is to say, maybe taking us like right back to basics. A couple of attendees ask, how does one go about investing in ESG, and what should a retail investor look out for when looking to invest in ESG products? So maybe kind of like a very quick primer there.
Yeah, there are a number of ways, but really, in terms of accessibility, liquidity, you're really looking at exchange-traded funds, mutual funds, ETFs. There's a growing variety of them. On the mutual fund side, you have both passive, sustainability and ESG index funds, as well as actively managed funds. And on the ETF side, predominantly index, but growing list of fixed income options, and more in Asia recently. Again, not in big absolute dollar terms, but in terms of relative growth. I think that's the best bet, and do the research. There was probably still going on, but 2 years ago, 2.5 years ago, there was a wave of truly non-ESG funds, slightly rewording prospectus and marketing materials and suddenly becoming ESG funds. I mean, it's just greenwashing, rampant greenwashing. It's been more or less crushed, but just, do the homework, take a look at the holdings. There are many sustainable and green funds out there whose holdings would surprise you. But that all depends on strategies. I mean, if you're dead against fossil fuels, just make sure that the fund isn't investing in fossil. It may be underweighted relative to the market, but it may still be invested in some of the big integrators. Just take a deeper dive into it. But that's the safest bet. I mean, there are emerging options, but yeah, I wouldn't be recommending anything like that right now. I'd stick to the tried and true ETFs and mutual funds, more of which are becoming available in Asia markets.
Got it. Thank you for that. I know that I said we'd take a last question, but maybe I'll ask you to tackle rather this one that just came in. If the ESG component is tied to consumer products by ESG rating, will this affect companies like Alibaba and Amazon, as a lot of their products? ESG component is tied to consumer products by an ESG rating. Will this affect companies like Alibaba and Amazon, as a lot of their products generate a lot of environmental pollution?
Yeah, that's a really good point. The upcoming webinar, Metrics and Materiality, is going to get into that. Emissions, but other things, predominantly greenhouse gas emissions. I'm sure you've heard of scope 1, 2, and 3 greenhouse gas emissions. But that concept, like scope 3 being all indirect emissions, on upstream and downstream, including product end of life issues, right? So, if I buy a computer, piece of electronic equipment, and its end of life is in 3 years, that's electronic waste, right? So whose footprint, which company's footprint does that fall under, right? Is it the manufacturers? Is it the retailers like Amazon? That's an issue that the industry is struggling with right now. But you're seeing more and more requests for and/or requirements for end of life cycle reporting, particularly where the end of life environmental impacts for a product like electronic waste are pretty significant. So, I mean, to answer the question more directly, yes. That, again, depending on jurisdiction. So manufacturer A manufactures the widget that Amazon sells. Most of the reported environmental impact for that widget sold on Amazon is going to be in the sustainability report of manufacturer A, but it's not, I say most of it, but that might still be only 20-30% of the total environmental footprint. 70-80% of the environmental lifecycle environmental footprint of that widget might not be reported by anybody. And the goal is ultimately with full lifecycle accounting that we get between the manufacturer and the trucking company and Amazon and everyone else involved, that we somehow get close to 100% accountability for the environmental footprint of that widget. But we're not even close to that. It's a really important question. I'm glad you brought it up.
I thought it merited some discussion. Yeah. And thank you very much for tackling that. And thank you for this entire presentation and discussion, Kyle. This was very enlightening. Thank you everyone for attending and for sharing your questions. And of course, thank you to SGX for collaborating on putting this webinar together. And of course, stay tuned for more announcements on the future webinars in this series. If you would like to engage Kyle for bespoke research requests, please do contact your Smartkarma account manager. And I definitely recommend that you follow Kyle's profile on Smartkarma so you don't miss any of his insights. If you have any other questions, please email us at research@smartkarma.com. And with that, Kyle, thank you very much once again.
Yep. Thank you. And thank you, everybody, again.